The rupee continues to sail south for a second day. The currency touched an intraday low at 62.96. While there were some reports of RBI intervention at 62.90, the rupee still closes the day at 62.93 with more than 0.5% of a decline. Joining us on the show are Jim Sinclair, commentator currencies, and Paresh Nair, head of foreign exchange and fixed income, First Rand Bank. Paresh, to you first, how do you see the rupee the way it has been declining for the last 3 days now, and where do you see it stopping, and what are the fundamentals that you're reading into as well?
We saw rupee appreciation in the last few days as well, when we saw rupee testing 61.87 intraday before closing down towards 62.35. Yes, there has been good amount of buying at the level which is closer towards 62. The market expects that there could have been oil imports which were all there in the market, and expectations in the market and the rumors are talking that oil companies are buying around $250 million per day, and balance amount probably is still going through a swap window. Obviously, RBI might decide when to go for a full swap window for them or allowing them to the market. And 62 was the level probably where was rupee actually went down, and then probably the RBI would have told that, you can buy slightly more. So that was one of the factors when we saw the rupee jumping from there. So giving an idea for most of the guys who have been sitting on the sidelines that it could be a good level for a absolute near term to pick up and cover your imports. Apart from that, yesterday's comments from the Fed Bullard and FOMC meeting minutes suggesting that there could be again tapering coming in coming months. Probably there could be December or March, that's anybody's guess. Obviously, the economic data which is going to come up will give more light towards when the tapering is going to happen, but it's going to be a slower phase. That has impacted the equity markets. I think, I don't know whether the FIs have been the sellers there, but the fact is the markets have been seeing good amount of selling. And obviously, the equity markets come down, so there is a fear that maybe the FIs are selling and dollars also being bought. So rupee, I think, majorly because of euros move, because of dollar strength, and along with the equity downfall, we saw rupee almost testing 64. Oil companies are there. So fundamentally, I think we are dependent on how the overseas markets are going to behave and how much is the oil demand keep coming in the markets.
Fair point. Jim, this one is to you. Of course, everybody seems to be pointing out to what happened in the Fed meeting minutes yesterday. What's your view on the U.S. stimulus and its impact on the dollar now?
Stimulus is the creation of additional U.S. dollars, the same as creating additional amounts of any commodity with a static demand. You result in a lower price. I believe that 0.7900 on the USDX is a point of U.S. intervention. I believe that at 0.825 is an area where people wish to sell. I foresee the currency trading between 0.7900 and 0.7950.
Vijay, how would you look at the dollar index as well? Because it has been a very choppy day from 81.20, almost on the higher side. We have fallen below 81 yet again.
Manisha, the 81.24 to 81.40 is a band I talked about as a resistance for the near term. It's unable to sustain past that and overcome this hurdle. So my guess is the probability of 80.60 and thereafter 80.42 should not really be ruled out. Of course, one needs to watch what happens at those kind of levels. If the bulls come out there and start supporting the USD, I think this would count as a healthy correction, and the USD index might just go past the 81 quarter this time around. But should it get violated, I think the dollar bulls could be on the ropes in the absolute near term.
Jim, what's your sense on the emerging market currencies, which have seen some support from the U.S. stimulus extension? Do you see the gains sustaining?
I believe that the present recovery in the United States is yet to reach the level where tapering becomes, or multiple tapering, becomes a viable option. Therefore, I expect the stimulation on the currencies of the developing world to remain intact.
Paresh, while the rupee has seen a decline, it wasn't just that. If you look at the 10-year yields, those were trading at a 3-month highs as well. So would you say that the pressure perhaps is coming from all sides?
Yeah, we have seen that the debt market is being sold by FIs every day virtually, and that's what the impact could be on the rupee as well. But I think it's more of the sometimes a mismatch of the demand and supply. Definitely today's factors have been more of the global ones, and one has to watch that how RBI is going to really protect any level at all or not, because 63 becomes a psychological level. Today it got protected. No doubt euro has come up late in the evening, and one has to see that in case USD index again goes higher and the euro trades below 1.34, I won't be surprised that the rupee weakens further. But yes, the opening is always dependent on where the euro is being traded, and obviously then during the day one keeps watching how the equity is going to behave.
Fair point, Jim. What's your coming in on rupee now? Because we have seen a lot of volatile moves coming in from the currency on the domestic and lots of global factors as well. How would you see the Indian rupee ending the current calendar year?
I believe that recent actions taken to improve the balance of trade will lend strength to the rupee going into the end of the calendar year.
Vijay, with the kind of move that we have seen today, almost nudging that 63 mark, do you see that reaching in the trade tomorrow?
Very likely, Manisha. I have always maintained that the scope for appreciation of the rupee was fairly limited. Yesterday I talked about 63.5, probably even 63.70 in the futures space, the prompt month futures and the currency derivative segment on the NSE being a kind of reality. And I think it's very likely that it could happen as early as tomorrow.
Paresh, Fitch also came out with its statements today. How are you reading into them when they say that the transition for the Indian economy, especially the way the Indian rupee has been behaving in this year, is going to be difficult? How would you read?
I think we have seen the worst for the rupee for some time, and definitely Reserve Bank of RBI does have good armor. We saw the reports that the window which has been opened for the swap for the FCNRB and for the bank's overseas borrowing has already given $22 billion, and then we still have few days to go. So I won't be surprised that in case there is a kitty of 25 billion plus, I don't see any major run on the currency as such. But yes, we should be prepared for volatile moves with 61.50 on the lower side. Maybe 62 also becomes very good support. And in the near term, we should be able to see 64 giving us a good resistance on this.
Paresh, I want you to come on a slightly longer term as well, because there have been various reports from these known international broking houses giving a rupee range between 55 on one side to 70 on the other side in the coming 1 year. Which side are you leaning?
Well, I will stay away from predicting the moves, because I remember somebody saying that I always wonder that how somebody can tell that on this particular month or a day their rupee value will be at 64 or 60. I mean, there are many factors one has to watch, and I would, as I mentioned, that I would assume that RBI is having a lot of ammunition in case there's a run on rupee. So I will stick with that for a shorter term we should be able to see 64 as a cap.